Hey, what's up, everybody? This is episode 13. Tonight's is going to be a wrap-up, a couple of quick lessons to help you improve your portfolio, a positions update, and then questions and answers like we always do. Just real quick, for you guys that understand this, you guys DM me on the side. I don't mind the DMs. What I mind is when I get 70 DMs on the side and you guys are showing me you went from red to green, that my rules work, and you tell me, thank you, I didn't think I'd go from red to green. So again, please just do that in public. Everything we do for this platform is organic, meaning we don't spend any money on marketing. So if you are making money through my platform, if you're making money listening to my tweets or watching this video and you're learning something, please pay it forward and just suggest to somebody else, hey, watch this video. This guy talks about the market. He's pretty on point. That's it. Just pay it forward. So market wrap up, okay? Real quick, as predicted, the Dow opened up pretty strong. The Dow has tended to rotate. If you watched my live stream yesterday, I mentioned the Dow would likely rotate and we'd see a green day today. And that's exactly what we saw. Again, the market's shaky because volume's extremely light. What does that say for tomorrow for the Dow? Again, the Dow, there was heavy buying at the end of the day. So I think the Dow will be strong tomorrow. Does it mean your stocks are going up? Well, that's a question. All right, market sentiment is still negative. So the Dow is still a little uncertain. And if it follows the pattern, the Dow will be red tomorrow. So I'm hoping it isn't. Okay, let's talk about tech real quick, all right? And again, there was heavy buying at the end of the day for the Dow. But for tech, we have 8 straight days now where there was a tech sell-off. So anybody that has stocks where your symbols are 4 letters, okay? Whatever it is, it's a NASDAQ stock. Your stock is probably struggling, all right? Even stocks that have earnings coming out are getting hit really hard right now. There's been a complete sell-off. I'm going to show you guys a slide and exactly what the volume is later on this evening. Real quick, predictions. I think the Dow is going to be strong tomorrow. I'm hoping the pattern breaks, all right? I saw strong buying from 3 to 4, so I'm saying the Dow is strong. Tech, I'm worried about tech, but we almost saw the tech bounce this morning. We did basically, and then it sold off at noon, and then the president went on. He ruined my day. He ruined my positions. Again, he's the president. He can do whatever he wants, all right? I've got no political affiliate to any parties, but I just like when my stocks are going up that they actually enjoy a green day, and I'm sure you feel the same. So what I'm going to tell you, if you're invested in tech stocks, and specifically, I'm going to mention some stocks later, but zoom out, look at the biggest picture. So if you're telling me, yeah, I'm in this stock and it's been beaten up 10%, 15%, I'm in the options, I'm down 60%, you have to zoom out, all right? I teach a lesson about zooming out. And all I'm saying is, if we've had 8 straight red tech days and you're in a tech stock, you're probably being beaten up. So nothing's wrong with that. Of course you're going to be worried. Now, anybody in one of my favorite stocks, Tiger, T-I-G-R, is saying, oh, it's been beat up, it's been beat up. You know, it really hasn't been beat up that badly. All right. It went from 16.5 to 17.5 all the way north of like to $22. It's drawing back. It's pulling back. I think it's like 18 and change. Maybe it's 19 after hours. It's strong. Seeing how tough tech has been and the NASDAQ's been selling and everything's been selling, that stock should probably be in the $16 range. The fact that it's holding $18.5 or $19 is extremely strong. So as soon as tech does turn around, which is inevitable, it's not like tech can keep falling, and you're going to be like 21 straight days. Why? Because there are institutions that are buying tech. They started yesterday. I saw it a little today. I spoke to my friends in New York, right? Big guys, big trading account guys, big institutional traders, and they're starting to get really frothy, not frothy, their mouth is watering, I guess, when it comes to talking about tech. They're talking about specific stocks that they have an interest in, some stocks that I'm positioned well. So I'm excited for that. Now people are like, hey, have you seen look at the chart of this stock? Let's talk about Plug, for instance, right? So I had not arguments, but conversations like, look at this, look at the chart of this stock. Great, we've had 8 straight tech sell-offs. With that said, any tech stock is going to look like shit. All right, let's just honest. It's going to look terrible. So yeah, stay patient, zoom out. That's one of my real quick lessons. Oh, real quick, I wanted to mention Square. So Square's reporting earnings tomorrow, okay? Square, to me, is probably going to crush it, all right? So if you like to make a gamble, you can buy Square or buy the options in Square. Don't go crazy, all right? But I might take a chance tomorrow, and you know I trade through transparency. So if I enter into a trade, I'm going to share it. That's the best way for you guys to learn. And again, I haven't mentioned this in a while. If you're new to following me or seeing my video, I'm here now for one reason. It used to be 2, but I'm here for one reason, to make you a better trader. And if you're like, is he talking to me? Yes, anything you get from this live stream or for any of my videos, and if you subscribe to my channel, that's cool. Anything you get is just a benefit. YouTube is free. My Twitter is free. My platform costs $3.49 a week. All right. So I'm not killing you. It's probably less than a cup of coffee. I give you market directions. I give you my alerts, and I trade through transparency. I'm not a financial advisor. I'm a very smart person. I'd like to think. I see volume. I see demand, and that's what I track. So when I tell you I see certain things in the market, I try and share them with you so you can make educated plays for yourself. Again, I don't tell anybody what to do. I'm not one of those gurus on YouTube that's saying, hey, you need to do this, you need to do that. I show you what I'm doing, and I'm not perfect, but my options trades are trading at like 72% in the profit since March 1st, which means 72 out of every 100 plays I give are profitable. I've probably given about 40 plays. So about halfway there. Okay, so zoom out. That was a lesson. If you like to gamble, look at Square tomorrow. I'm pretty sure they're going to crush it. Their crypto earnings were off the chart last quarter, and I'm assuming the way crypto's just been on fire and businesses have been recuperating, that they're just going to blow it out of the water. That's what I think. That's what I'm watching. Okay, so Plug also has earnings tomorrow, right? So estimates, I think, are like minus 8 cents. Last quarter, they really screwed up, and they tend to miss. So I'm nervous. But if they come close enough, or if they happen to come in flat or minus 1 cent or 2 cents, again, it's very close. So say they have some extra revenue stream that people didn't know about, or they got some extra money, maybe a grant from the government or something like that. I think that stock could take off, and that's what I'm looking for. That's what I'm hoping for. I do have some calls that are out of the money that expire May 7th, but then I average down. Now, the best way to average down, which is going to be a lesson coming up, is I bought September calls at the same strike price. So I bought myself a lot more time. So should my calls expire worthless at the end on Friday or something very small, I have my calls. So if the stock spikes next week or in 2 weeks or in 3 weeks or in 1 month, and I'm correct, I'm going to make my money back and then some. It's the best way to hedge down. So I'm going to go over a specific options lesson. Again, 2 of my lessons are very option oriented. Let me just think. Okay, so before I talk about my positions, I'm just going to give you guys the lessons to start. Okay, so the first one is elevator ride. Now, what does that mean? It means don't go up and down on the elevator. Say you're in a condominium and you're going to, let's say, the 44th floor, right? And the elevator gets stuck on 36. It's kind of like when we make those decisions about whether we should sell our options if the market's going up or down. And sometimes we know the market looks like it's going to go down. Sell the options. Get off the elevator on like the 33rd floor. Walk up 11 flights. It's better than going back to the lobby. All right? Do you understand that? Now, again, your elevator might go back to 44, but the point is if you get off on 34, it goes down, you can re-enter. So a way to improve your portfolio, even if you're in struggling positions, ready? Options or stock. You see the market's turning, and it's been easily seen. Now, 2 days ago, we saw the market was like throwing up on itself at 10:50 a.m. to 11:15 a.m., which I tell you is the prime. And I said, it doesn't take a rocket scientist to see where we're going to end up. And the NASDAQ dropped 350 points, and the Dow went negative like 150 points, something like that. If you know your positions are going down, you sell your position. So I sell my option at a loss, and I sell it for $300 per contract. And then I buy it back that same afternoon or the next day for $1.20. So I just saved $180 per one contract. It's not like I was correct about the stock, but I was correct enough to increase my portfolio. Rather than having, $120 left, I now have $300 left. And if I enter that position, instead of having one contract, I now have 2 contracts. So it's about saving money. So I know I want to speak about Tiger because some people are killing it in Tiger because they're selling the peak and buying the dip over and over again. I've seen so many P&Ls where you've made the same trade like 5 or 6 times in the past 2 weeks. And then somebody reached out on the side and they said, I'm in at $3.50 and the option now is like $2.50. So I'm getting killed. I'm down 40%. What do I do? And I said to him, dude, it's a tough market. So when I tell you to take profit every day, and this is something I've been repeating for at least 8 days since NASDAQ started turning red, was to take profit. Okay, I never used to trade like that. I used to trade till it hit my price target. But now that we're doing more swing trades, option trades, we need to take profit. Okay, I messed up this morning. I'm going to talk about my trades for today. But I messed up this morning with Delta. I should have sold up here and bought back here. I would have saved 30 cents or $30 per contract. Okay, I had like 40 contracts. That's like $1,200. Okay, I didn't need to ride it down and ride it back up. Okay, real quick. Okay, so the other lesson, that's roller coaster. Elevator, roller coaster. You don't have to ride it up and down. Take profit, get out, wait for the dip. Oh, another lesson, okay? Don't have anxiety. If you have money sitting on the side, and I mentioned this in last night's stream, say your available cash is only like $1, you invested too much money in your stocks and options. It doesn't mean you have to buy it down to the last dollar. If you have $10 left, you don't have to buy 2 extra shares at $4 each, so you only have $1 like 69 left, all right? Be smart. If you don't have a great trade or a great entry point, leave your money on the side. Wait for that entry point. Don't have FOMO. Don't assume you have to jump in the market. There's a huge dip, and there's been a huge dip every day. However, if you want to play the opposite side and you want to play something in negatives and you want to put puts or something like that, and you see some stocks in the NASDAQ spike like they did this morning, all right? But the NASDAQ sold off 8 days in a row. It would have been great to jump on the other side. Somebody showed me an Amazon play, which was a put, crushed it, paid $14. It's up to $36 now. If you're watching, congratulations. It's probably even higher if she held. Okay, I had one other lesson, alerts for today. Okay, so yeah, the alert for this morning, by the way, was just to maximize profit because we're all getting beat up. So our Delta Airlines options were good. We're in a couple other positions that were good. The couple other positions were beat up. Okay, here it is. Options lesson right here. All right, so you say you're in SRNE because someone asked me to speak about that tonight. And it's been going down because there's been 5 straight outflow greater than inflow days. Less demand, right? There is demand for the stock, but SRNE, your options expire this Friday. They're $8 calls. The stock's at $7.30. Now, it would be great if it spikes and you get some money out of it. But the best way to average down would not be to throw money after a bad position that's out of the money. So you have 2 options. Number one, if you think the stock's going to move tomorrow or Friday, then you'd buy like a $5 or $6 call. So that if the stock goes up by 50 cents or $1, but doesn't hit the $8 mark, so it's right under $8, let's say it goes up 68 cents, you're going to get those 68 cents because your option that you're purchasing is in the money. Now, the second way to do it, which is a safe way as well, all right, SRNE, I think is at least a high teen stock and sometimes later this year, once they come out with the FDA approval and all this other good stuff. But let's not talk about that. Let's just talk about the chart. So the second way to safeguard yourself if SRNE doesn't get to $8 by Friday would be to wait for the dip tomorrow morning and to buy options for either June, July, but I really like September lately. I started entering these September options the other day because NASDAQ was so beat up. And I said, I know I like Plug. I know I like NEO. Okay, NEO outperforms. They outdeliver cars even with the chip shortage. So yeah, one of these days, NEO is going to take off. It's also heavily shorted. So I've got time on my side now. I didn't stress about buying May 7th or even May 21st options. I went out to September. And in my options video that I'm making for YouTube, which I just shot the other day, my example was Plug September options, $25 strike price. And I'm going to mention this position later. I paid $4.25 per contract. So it's $425 per contract. And then I repurchased the same contract today for $4.50 because I wanted to add more. I thought about the process. So anytime you think about why you're making a certain trade and it makes sense, so you take the pros and the cons. Now, if you have pros and you're like, well, this makes sense. They're coming out with earnings. They're going to beat. They have a catalyst coming out. If you know all these things about this one stock that you're following, then that's great. If you're more supportive, you don't necessarily have to follow the rules to a T. If you want to add a position on a dip, go ahead if you're that confident in whatever stock it is. Okay, so that's how to average down if your option is out of the money and you definitely still like the stock. That's what I did with SRNE. That's what I did with Plug. That's what I did with NEO. All right, I do have some option positions that are making money. So I mentioned SRNE. Okay, so let me just talk one more way about averaging down, okay? So averaging down with options. Let's say you have an option that you pay $2 per contract. It doesn't matter if it's a call or a put, if you're bullish or bearish, ready? So you pay $200 for the contract, right? It goes down by 40%. If you're part of my platform, that's the rule. At least 40% for options. So you make a position, your option value goes down by 40%. So you pay $200, 40% less is $120, right? So then you buy 2 more contracts at $120 each. So that's $240. Now you have 3 contracts, a total of $440. So about a little less than $150 per contract. So when your contract spikes, because you bought it at $120 now, when it spikes back to a $160 or $170, still under where your first purchase was, this $2 contract, but it's still 15, 20% down from the $2 mark. Instead of being negative 15 or 20%, you're positive 18 to 20%. So that's how you average down the correct way. When you buy an option, especially if you give yourself more time, again, another platform rule. So instead of May options, you pick the September options, nice and safe. You buy an option for $2, it goes down to $1.20. You buy 2 more of the same contracts. You put in $240 more, and now your average is $1.50 or $150 each. When it pops a little, you're going to be profitable. So again, red day after red day after red day after. It's tough. If you're getting discouraged, you're not alone. It's annoying. Even when you see your stocks start to move up like they did this morning and then just get beaten down. Okay? That's scared selling. I think the market's ready to turn. So my institutional friend said they're looking at tech stocks. They're waiting for earnings to finish this week. A lot of companies are giving their earnings reports this week, the majority, in fact. So they're waiting till Monday or Tuesday when the market settles. They don't think they're going to miss out, meaning they don't think the NASDAQ is going to take off Thursday or Friday, tomorrow or the next day. So they're like, dude, I'm not going to miss anything. What's it going to move? If it moves up, what is it going to move up? 1%? I'd rather be out of the market right now, see if it goes down tomorrow, see if it goes down on Friday, see how people react to the earnings. I think Uber came out with earnings probably after the market. I saw it tank like, 8%? So again, that's not going to look good for the market tomorrow. I'm just thinking about tech stocks. So I'm hoping actually that Square reports, it comes in pretty strong, and we see a tech rebound for Friday. So again, I'm probably going to be playing certain stocks late in the day tomorrow. And again, through transparency, if you're on my platform, I will alert. Okay, I guarantee it. When it's my personal position, I even tell you it's my personal position. Today, okay, real quick today, I took a risk in Tesla options, right? I saw the market was rebounding. Tesla was $6.89. I said if it goes down $1, I can probably buy this option for $1,310 per contract. So I bought a bunch of contracts. I mean, I really went forward. I bought a lot of contracts. And what happened? Tesla spiked to $6.75. It moved $6 within like 10 minutes. The market was rebounding. It was looking good. And then I think the president spoke, and it went to 672, 671. I got scared because I know Tesla moves fast, and I don't want to be homeless. So I sold my options for a 6% gain. And I think Tesla was like 670 or something like that, but then it touched 669. Anyway, then it dropped 667, and then the market bounced at the end of the day. So that drop off at the end of the day and that bounce, that's a pretty supportive bounce. It's not a dead man's bounce. If the market was going to tank like we saw it tank and that big drop off, if it really was going to capitulate and just throw up on itself, and I like to use that term, it would have just fallen and it would have broke through all these supports and your stocks would have looked like shit. I mean, I looked at a bunch of different stocks, and you know what? They had a nice bounce at the end. So again, and money, you know where money was at the end of the day? It was going into tech again. So I don't know. They did that yesterday. So I'm thinking, here's what the institutions are doing, right? They buy in the morning. They don't give a shit about what happens to the market during the day. And then at the end of the day, at like 350, they buy. Why? Because they don't day trade. Do you understand? Institutions aren't there swing trading. They're not like, I'm going to sell this tomorrow when it pops 10 points. They're holding for the end of the second quarter. So the end of the second quarter is the end of June. They're holding for at least 60 days probably. Sometimes they'll hold even longer to the third quarter. They like to change up their books before quarter four, before the end of the year. So again, if they're purchasing and they're calling the bottom on some of these stocks, like Plug was huge at 4 p.m., yet after hours it's dropping. Okay, so those are my examples. I think we're good there. Yeah, I'm going to talk about some slides and my plays today. So I'm going to talk about my plays real quick. NUE, right, is killing it. Oh, you know what? Let's pull up the charts because that way I can talk about this. Let's pull up the chart. Let me split the screen here. Okay, perfect. Yeah, there it is. NUE. Okay, so it's got a great chart. I entered into this on, a day ago, I think. You don't need to know my position. Anyway, it's killing it. I'm making over 100%, 164%. I was going to shoot for 200%. I changed my mind because I'm going to show you the chart. Go to the next slide, please. The chart. This is the 5-day chart. What does it look like? It looks like it's getting better each day. So you guys know that you're in some stocks that have the complete opposite look. Or there are some stocks that maybe look like a W, like there's a dip here and there. Look how solid this chart is. So I've been talking about this stock for a couple of days. The chart is solid. I'm hearing word that this could reach 100 by May 21st. So I know some of you think you're late to get in. If there's a substantial dip, I don't know why there would be. There's huge demand. But there was 2 dips today. You can see it in the chart real quick. It wasn't substantial, but you could have got in, at $5.50. Now that same option's like closing in on $7.50. So a $2 change is still 37%. So even though you're late to the party on this one, you could have got in. Let's go to the next slide. Next slide. Or not. We don't have to go to the next slide. All right, so let's not go to the next slide. You know what? Let's go to the Q&As. I'm done with this slide. Let me talk about my positions. My positions are next slide's not coming up. So my positions were Delta Airlines, which I messed up. I mentioned I should have sold this morning real quick, and I didn't, and I could have bought it back, right? So that's one of my positions. What else did I like? I don't even know. Excuse my language. Anyway, let's just go to the Q&A. I don't know what's going on with the slides. I wanted to show you guys some stuff. I don't know. Maybe it's working again. I'm sorry for this. No, it's not really working again. I don't know what's going on. So we'll just skip the slides. Let's go to the Q&A tonight. Let's just get started with there. Anybody that's sticking with me, I appreciate that, and I apologize for that little issue there. The slides weren't that great. I was going to show you how nasty the NASDAQ was for 8 days, and you already know that. I was going to show you something else, Delta Airlines, how I got in, how so many of us took profit. That's great. Again, it retracted. So what am I looking to do with Delta Airlines? Real quick, if it drops a little tomorrow, I'm going to enter into longer-term call contracts. I think the airlines might get hit a little tomorrow. I don't know why they got hit so hard today. Same with Carnival. I know some of you have been in Carnival. Like, why isn't this going to move? So let me just explain the philosophy or the theory behind trading Carnival, right? Why do you have to buy Carnival today? You don't. You have to buy Carnival before they make an announcement like, hey, we're going to start cruising on this specific date, because that's when people start jumping in. Now, me, I like to plan ahead and get in early. So now that I'm talking about buying certain options that are out a number of days, I'm going to look for Carnival, maybe September calls, maybe in or out of the money. Let's say like $30, $25, $30, depending on the price. Because I'm pretty sure by midsummer, when everything gets rolling again, Carnival's going to be north of $40. And by the end of the summer, when things are going good, it'll be like 45. So this is what I was going to show you about the market. You can just see the volume and what's happened the past couple of days. Now, the decline was less today, meaning I actually saw it turning around today. There was some buying this morning, and then the sellers and the outflow just went too strong. So what was probably happening is the market was starting to rebound, and there were so many people that were beat up thinking the market was just going to fall again. They started selling and profit taking. Let's go to the next slide, please. All right. Again, so 8 straight days of the NASDAQ. I spoke about this earlier. There was huge inflow at the end of the day. So do not be discouraged. You have to zoom out. I spoke about that lesson. Just zoom out, look at the bigger picture. Let's go to the next slide to see if I can cover Dallas. Yeah. So pre-market video, I told you what I expected out of Dallas, Delta Airlines. And I was actually looking for it to break $46 and change. I got a little greedy this morning. I still got more value than if I'd sold this morning. I got $1.82 per contract. I paid $87 per contract off of my alert. So if you do the math, it's 112% I returned. A lot of people returned just under 100%. They sold out a little earlier. I was pretty sure the market was going to recover today. However, I would have been wrong if I had held on to it to the close of business after the president spoke and then the market threw up on itself. I would be so upset with myself because I'm assuming those same options are probably like $1.30 now or $1.20 something. All right, let's go to the next slide, please. Crushing it. Okay, yeah. So party. If you guys are looking for recovery stocks, right? I mentioned this when Party, PRTY, Party City was $5.50. It went down from $6.50 to $5.50. I doubled my position. I have a $10 price target. So at the time, that's like a 44% gain. Now, Party is so strong. If you look at the chart, and I encourage you to look at the chart, same with NUE, looks like a good chart. Now, the fact that you can watch these stocks and add them to your watch list or even purchase them, and you could see if there's a decline. So even though I was late to the party with a couple of them, right? Party, I think, is going to 10. So I think you can still make what, like $2.50, about 33% in not too long, maybe a month, maybe 2. Okay, next slide, please. Tesla, I mentioned the risk I took on Tesla, and then I got out. I thought I was going to make a killing, and not a killing, but like 30, 40, 50%. As soon as I bought it, I was up 15%. And again, I had to settle for 6% because the market basically capitulated. Let's go to the next slide, please. Next slide, let's just pass Tesla. See what we got here. NUE, let's pass that again because that's the same one we did before, same one. All right, let's go to questions. Let's break this back and go to questions. All right, so we're going to talk about stocks today. We're going to talk about what questions you guys have. Let me just open my phone here. I'm going to tell you what I'm seeing. Now, if you're telling me it's a tech stock, I'm probably going to look at the 3-month chart and the 1-month chart. Usually when I analyze stocks for you guys, I look at the 1 month and the 5 days. But if it's tech related and I'm looking at the last 5 days, It's not going to tell me anything. Everything's going to be a diagonal down. Everything's going to look like poop. All right. So everyone needs to listen to algorithms to come up with other people's searches. Everyone needs to oh yeah, that's a great idea. Please, everybody like this video. So everything I do is organic. So please, if you're following this, please like the video. I don't know how comments are related and stuff, but please share this stuff. All right. Everything I do. So I do this for $3.49 per week per person. We're not killing it. We don't have 100,000 members. You guys DM me on the side. I answer as many questions as possible. In public too, public Twitter, I answer as many questions as possible. Why? Because I care. I mean, if you don't know that by now, I don't know what to tell you, but I care. And that's what I do. And I feel bad. If I see a question, I can't ignore it, but I'm busy. I'm doing work, or I'm working on the platform, or I'm trying to trade myself. And I'm like, okay. So sometimes I actually miss trades myself because I'm explaining to somebody else because I'm so fearful that their questions to me are like so scary. Hey, I'm so scared I entered into the wrong position. Should I sell it? I'll be marked as a pattern traded. No, wait it out a day. If it turns out okay, let it ride. Okay, so please, yeah, like this video, pass it around. Do I think Plug's going to dip by earnings? Okay, so I don't know that much about Plug's earnings. I know they were terrible last quarter. And when I say terrible, I think they were supposed to come in like minus 11 cents, and they came in minus 121, $1.21. So the stock, tanked. And people are like, oh, Plug's been around 20 years. All they do is steal money. Yes, but people change. Stocks change. Remember Eastman Kodak used to take the Polaroid? Now they're making drugs. So again, things change. I happen to think Plug may surprise. And I only say that because I hear whispers on Wall Street. I always keep my ears open for you guys and for myself. Now, I don't believe rumors. I don't believe news sometimes. I have to see it for myself in the demand, in the chart. Now, I saw this morning. If you look at Plug just for today, and you go back to what was it? 10 o'clock, 10:20, 10:30 this morning, it was tilting up and it made a nice jump. Somebody made a nice investment. Somebody wasn't scared of the market going 8 days negative for the NASDAQ or earnings tomorrow. Somebody wanted to get in, and they paid a little too much because they could have got it cheaper. And it was definitely an institution. So I'm not saying institutional buys are always correct, but they're on the right side. If you look at the large buys for Plug, I'm pretty sure the past 2 days are probably green. I didn't look at it. I don't want to. Okay, you know what? I have Plug right here. Let me just go down to the bottom of the screen. Hey, look at that. So last 5 days, the first 3 were red, red, red. Everybody was selling, selling, selling. And the last 2 days, institutional buying, 2 million shares and under 1 million shares. So that's some real buying. If you see that, and again, I use Webull, but if you see the green on this side right here, those are big buys. If you don't see anything, then you're just trading small positions. It's just you and other retail traders analyzing a stock. It's not big enough for institutions to get involved. They just don't care. So if you don't see any large buys, and they don't have to be institutions, they could be hedge funds, they could just be big block traders. Okay, so yeah, Plug, you should be worried. I mean, the NASDAQ is throwing up on itself. If you're that worried, here's another option, right? You can take a Plug option that is a put that is like a month out, right? So if they report and earnings suck and it drops, you could profit off that put. Now, say they report and earnings go up, you can still sell your put for some type of intrinsic value. It's kind of like safeguarding. Like if I make a wager on a sports game and my football team is up like 21-0, I might take the other side plus 16 points. So that way, if something terrible happens or, and the other team wins, at least I have some type of, covering. It's just a hedge. So hedge funds are created, or you hear their name, hedge funds. It's because they hedge positions. They take a position, they make 40% profit, and then they take the other side. That way, if it goes up more, they're okay, and they'll sell here, and then they'll double down on this one, thinking it's a head and shoulders, and it'll come back. I used to make profit on both sides, calls and puts. It was like whatever was thrown in my plate, I was told to make profit from these trades. Like someone would ruin an account, pass me the stuff. So I would look at the options, and some of it were contradicting each other. So I would wait for the spike, and I'd plan ahead. If you don't plan ahead, okay, real quick lesson, plan ahead. As soon as you buy an options position, if you're looking to sell it for profit, whatever the profit is, you're looking for 20%, 50, 100%, put in the order. So you buy something for 200, you want to make 50%, put in the order to sell it at 300 as soon as you make it. That way you're not staring at your computer. And if some news comes out like it did the other day, somebody made like $1,500 5 minutes after I gave an alert, the stock just jumped. It was crazy. It was a ridiculous return. Okay, let's go into the next stock. I don't want to take up too much time. All right, SRNE. Any hope? Yeah, so there's hope for that one. I've seen 2 days where there was demand, and I'm like, okay, things are going to change. But then the market gets so scary. So if we have one of those days where the market somehow rebounds, 200 points here, 300 points here, yeah, that one's going to pop like 70 cents. It's going to move 9%, 10%. And that's going to happen very soon. Just, I don't know if it's happening Thursday or Friday. So what I would tell you is plan ahead. I don't know what the options are now. I think they were like 12 cents earlier. Maybe they're still there. If you want to get 18 cents or 20 cents, plan ahead. It might spike. Maybe you get 40 cents. Who knows what it might happen? Me, I'm rolling the dice. If my options position is down 78% or even more, and I can save like 12 cents per contract, yeah, 78%, no, maybe like 75%, whatever it's down, I'm probably going to risk it. All right. I'm in a lot of positions. So when I'm talking about my NUE position, I'm looking to get 200%, and then I'm going to go, no, I'm going to get 400%. That's why you have to get max value from all of your trades, because not every trade is great. 72% of my options trades since alerts have been profitable, but the 28% suck. And if you're not me and you're not making every single trade I'm making, and you pick the 28% that sucks, and then you compound it and you repeat and you average down the wrong way, instead of SRNE averaging down this week, let's say you bought more options to average down this week, and you're buying more options that are out of the money, and if they expired today, they'd be worthless. So again, if you're going to average down with that, let's say tomorrow morning it dips to 7.18 and you want to average down, play the $5 or the $6 calls expiring on Friday, or play the $7 option or $8 options that expire out a few months. Go $8 and go for July. That way, if it doesn't move this week, we already saw it. So SRNE, we saw it before the market turned red for now 6 days for that stock. It bounced to $8.80 off news, off trials, or whatever it was, trial 1, trial 2. They made it phase 1 or phase 2. They made it through the next phase, and then pushing forward. And just so everybody knows, you know what phase 1 is for everybody? It's saying that like nobody got sick after the injection. So when you saw they were testing Pfizer, Moderna, AstraZeneca, all the viruses, and they were like, yeah, we have 30,000 candidates, and they all made it through phase 1 without any problems. That's basically saying they got the injection and nobody died from getting the injection. It wasn't saying that it was safe. It wasn't saying that they're moving on to phase 2. It was basically saying that nobody died. I mean, how crazy is that? It's just ridiculous. All right, let's go on to the next question, please. I love this part. Okay, SI, I don't know the stock. And just to recap for everybody, when you mention a stock, my position is either going to be hold or sell. If I don't like it, I'm just going to tell you sell. I'd rather have the money on the side. If it's a hold, then I'll tell you it's a hold. And if it's crazy and I like it, I might tell you I'd buy it. Okay, this is a Silvergate Capital. I'm assuming it has to do, I don't want to make any assumption that it has to do with silver. Kathy Wood loaded up and something. Okay, so the 1 month chart, the 2 month chart, there was heavy selling. Yeah, this stock looks good. I'd be holding this stock. I'm looking at the 1 month. Okay, now volume was really low today, so you made 2% today. Volume was dead. 441,000, that's 1/3 of the average volume. So it could be misleading. However, if you look at 2 days in a row, it was green the other day. So it does look like it's turning around. I'm actually going to add it to my watch list. I don't know what it is, but it looks good. And if I was to say where it could possibly go, so this stock for everybody, SI, you might want to add it to your watch list. It's $104. I'm going to do a little more research, but I'm looking at the chart. Now, if this chart bounces, it looks like it's showing support. And this stock seems to bounce pretty hard. So whoever suggested this one, it looks like it could bounce to like 145. I don't know what it is. I'm going to do more research, but don't be surprised if I give an alert out this one tomorrow or the next day. If I think it's good, again, I'll wait for the biggest dip, but it seems to have support. I'm going to look at the 1 year chart right now. It moved from like nothing to something good. It was in the 40s, then it went to 174. It's been pulling back. If it shows support and if it bounces, it could easily go back and do one of those triple peaks, because there were 3 peaks. I've seen 4 peaks before. So yeah, this one's a good one. I appreciate you pointing that one out. Thank you. All right, let's move on to the next stock. I'd be holding that one. I actually might be buying it. Bitcoin 2021 meeting in Miami. That's my birthday, June 5th. Something to pay attention to. I don't know. I didn't hear about this. And here's my thought on Bitcoin, okay? So all of us crypto investors, and I did this myself, so I'm sharing through transparency. I had 2.76 Bitcoin. I sold it all right under 59,000. Whatever day it was when it spiked last Friday, I guess it was. And you know what I did? I put probably 30% into Dogecoin, which I'm killing it because I was in under 40 cents and now we're 66 cents. So, I mean, I don't even look at the account. It's just, it's ridiculously large right now. So everybody's feeling the same way about crypto. A lot of people taking money from stocks, putting in crypto. Bitcoin, a lot of people are selling their Bitcoin. And these are like retail investors like you and I, and they're going to Doge, and they're going to this other moon coin, and there's just so many coins out there now, and they're all returning ridiculous amounts. CNBC, they were laughing today. Oh, Dogecoin, yeah, if you invested, you would have 9,000% return just this year alone. And then they would all laugh. When is the public going to catch on? Well, what if they're wrong? What if these uptight, I want to say a-holes, are wrong? I mean, I think they're wrong. I like Doge. I'm running Doge to 92. I'm running other cryptos. All cryptos are off the chart. So I think Bitcoin's suffering because it's so valuable. And if you have one Bitcoin and you have $56,000, then you could take 5,000 and put it into 10 cryptos. And if just one of them, right, just one of those 10 goes up 1,000%, you're killing it. That's more money than you would have had in just Bitcoin alone. So diversification, if you have $5,000 and you want to split 1,000, 1,000, 1,000, 1,000, 1,000, and one of them goes up 1,000%, now you have $10,000, plus you still have the other 4,000, and those cryptos are probably going up too. So that's a great idea that I've been doing, and I just recently did it. Some of you people that follow me are killing it in crypto, and I'm going to look more into it, and I'm going to come out with a YouTube video where I analyze like the type 20 or 25 cryptos. I'm going to tell you exactly what each does, what I think is a good, I'm not going to mention prices and stuff. I'm just going to mention what they're used for, because that's ultra important. All right, let's go on to the next question, please. Do I have any recommendations for long-term ETFs? I saw that question today, and unfortunately, I don't. ETFs to me mean like you're an older person, you don't want to follow the market. If there are certain ETFs like that invest in fintech, that's what I would look up. So whatever your institution is, whether it's Fidelity or TD or whatever it is, let somebody know that's working with you that you want to be in fintech. That's the area that I think is stronger. Now, what would I do? If I wanted to be in a company like that, I'd be investing in PayPal. I'd be investing in Square. I'd be investing in any of these platforms that are starting adopting crypto. I heard a rumor that Amazon's going to start adopting crypto. I mean, imagine what would happen to Amazon stock, much less crypto, if they start doing that. I mean, it'd be crazy. Okay, AI was great with strong demand, pressing $72 before all this nonsense started. So I actually think it went to 59 today because I own some. It probably went to 58. That's how my luck is. Yeah. Okay, so yeah, 58.74. It only lost 51 cents today, which is good for that stock. I mean, it's been so beaten up. It looks like it wants to rebound once, twice, 3 times, and I'm just looking at the one-day chart. So it's struggling, all right? Looking at the 5-day chart now. I know this stock is strong. I mean, you can't look at anything but how beat up the market's been for 8 straight days. Before those 8 days, it peaked at 72. And let me tell you what I'm looking at the volume now for the last 8 days. So minute. The last time this stock AI had good volume was April 14th, and it was pressing $68. So I'm sure, okay, that it is oversold. And when tech rebounds, now I'm not saying it's happening tomorrow, but if it happens Friday or Monday or Tuesday, you want to have AI on your watch list. If it goes down anymore, if it goes to 55, 56, whatever, and the market in NASDAQ just sucks for another 2 days, when it finally turns around, AI is going to move fast. And you can snapshot this one. AI will be back at $70. Within a week, when the market finally bottoms and starts to turn, within 5 days of trading from that, AI will be at $70. Okay? That's like a personal guarantee. All right, I'm not a financial advisor. I just see trends and I see demand. Matt, bring back the small account. I couldn't. So the small account challenge I had with Robinhood, I got so pissed off that I was trying to execute a trade and I kept missing my point. And then it would tell me I'd have to bid lower. And I was like, F Robinhood. My other platforms don't do this. I plan ahead. I hate Robinhood. And now I understand why so many of you traders are so upset at Robinhood. No wonder you lose money. First of all, they try and make it as simple as possible, but they're really screwing you. They tell you what the bid and ask is, but that's not actual information. When you put in the bid or ask or try and nail that, say you're trying to unload an option or a stock position, it's never accurate. You're always like, why didn't it execute? And if it did execute, let's say you put in to sell or close a position. If it executed, guess what? Within 2 minutes, I guarantee you would have been up an extra 5 or 10%. It's like they steal from you. If you're a sucker and you're putting in a bad trade in Robinhood, like you're 2% lower than the bid or whatever it is because you want to unload the position, they steal it from you. They don't get you the best price. A lot of other platforms get you the best price. So the small account challenge, yes, I'm setting up another account. I'm going to make it even smaller. I'm going to put $500 in. Okay. I'm not trading any stocks. I'm going to trade one option position. I might even trade one stock just to show you guys, knowing I teach a lesson. You know a stock like family, meaning know its ranges, know its patterns. It's tough to do. So when the market is down, tech specifically, because we all love tech, is down 8 days in a row, it's hard to say, hey, your rules work. When you guys started joining me in March, remember, the market was so ugly for 12 out of like 14 days. And everybody said, hey, I'm following your rules, but I'm down 15%, 20%, 25%, 18%. I'm down at all 4 stock plays, whatever it was. Well, you know what? My stock plays are 11-1 closed out. Now I think I'm 12-2. My option plays, I'm 30-12, 30 wins, 12 losses. So again, your red positions turn to green positions. Another saying I do, small piles make big piles. People show me their trades all the time. So please share them in public. Pay this forward. We are doing another small account. I'm going to put $500 in the account. It's going to be an options trading account. So please be prepared for that. I'm going to look for the biggest dips. I'm going to show you guys. We do extremely well. I do extremely well. When you have 2 good days, 1 bad day, 3 bad days, 1 good day, it's okay, because what I'm teaching you guys and what I'm trying to show you guys is how to prepare. So on red days, you prepare. Now, if there are 8 red days in a row, you can't help it. Now, the Dow is completely opposite. The Dow is strong. So if you want a good strong play right now, I mentioned this yesterday. I mentioned Exxon. Exxon was up 3% today. You could have bought in at market open. Oil companies are still going to do well. As the economy reopens, we're going to need to use oil. I think the U.S. said the reserves were down today, which is why some of these companies spiked. But if you look at banking stocks also, now I mentioned Citigroup. Back I think when Citigroup was $120, I think it's $156 now. So that's probably like 32%. It wasn't so long ago. So there are some safer plays. Now, if you're investing in a bank or Bank of America, Citigroup, look for the best of the best. All right. Visa is another good play. They're adopting some type of crypto, and they have crypto on their books. So you could always find out who has crypto on their books and look at that. Let's go past the small account. TRIT has low volume. TRIT's had low volume forever. TRIT's been beat up forever. I'm sorry to say. I'm sorry I ever got involved with this stock. With that said, it's going to spike again. Right now, if you look at the chart of TRIT, so if you want to look at, share with me, TRIT, right now we're in a valley, all right? You'll see a valley around March 3rd. You'll see a valley around March 28th. We're in the valley right now. So yeah, if you want a safe play right now, I'll give it out again. So what did I just make a comment about another stock ending up good by September? I'll tell you, TRIT. Now, I'm not saying it's going to be $10 a week, but I'm saying give me 10 days and a mix, 5 green days, 5 red days in the next 10 days, and TRIT will be north of $8, which will be a 15% move. So actually, I'm probably going to buy some more TRIT options. See, this helps me as it helps you. When my light bulb goes off, I share with you. Now, if you're sticking with me and you're watching this video, it's going to pay out. If you watch some of my other videos, they're great. Please subscribe. I have an options video coming out. I'm giving you a specific position I think is going to return 100 to 200%. So you get rewarded for watching my videos, for asking these questions. If I tell you something's good and I get excited, you guys see me get excited. You also see me get down. So if I don't give an alert, it's because I have no alerts to give out. I don't want to put you guys in shit. I don't want to put anybody in something that's going to lose money. If I give out a position, I have strong belief in it. So let's move on to the next stock. So yeah, I like TRIT. I think it should be north of $10. But let's talk about more immediate near term. I say within 2 weeks, it's back above $8 or $8. OCGN, want to get back in? No, it dropped 20% the other day, maybe 16%. I'm going to look it up because why should I shortchange anybody that's sticking around and asking a question? I don't know where it is because I don't know where on my watch list it is. OCGN, GN. So I saw it this morning. It started to move this morning. It was up 2% pre-market, 4%. And I was like, maybe I should let people know that there's being a volume play here and it might be a play for the day. And then I looked at the chart and I said, you know what? This could drop so hard. And if I was to put people in this stock because I say, hey, look at OCGN, the volume is spiking up. It looks, what happened today? It dropped $1.60. It dropped close to 13% after hours. It's down another 2%. So would you rather me give you an alert and you'd be down 14 or 15% on a very volatile stock? So this stock is getting a ton of manipulation, meaning People will spike it, make it look like a great stock. So I'll buy 20,000 shares at $10.50, let's say. It's spiking all the way up to $11. I buy another 10,000 shares at $11. Now it's spiking to $11.50. So what happens? You all are getting in. Now the stock is $12, $13. And that's when I go sell, 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 sell. 20,000 shares. Again, multiply it out. They probably have 200,000 shares. I mean, this stock traded 95 million today. So no, I don't like the chart. Let me look at the 5-day. The 5-day looks like poop. You know why? Because today, the 5th day, it's lower than any of the other 4 days. So today is lower. And it's not like this is a NASDAQ play. It's a biotech play. So today it's lower. And maybe because that market threw up, let me just see. Volume has been really low the last 2 days. So you know what? It might be also people being safe. Now, again, it's a very volatile stock. If you're in it, you're not in it because you asked it's a good time to get back in. Yeah, it might be a good time to get back in if you can get it under $10. And if it drops under $10, I would be scared. Remember, their offering was $10 a share. Let's go on to the next stock, please. I'm sitting in cash right now for the next week. Yes, perfect. Sit in cash. Why? Because tech will bounce hard. You think 18s, okay, real philosophy in life. I believe in yin and yang, right? Everything evens out in life. One door opens, another one closes, or one door closes, another one opens. Everything happens. There's a life pivot. All right. So yeah, the market's not going to throw up on itself for 16 straight days. So what's going to happen? One of these days, you're going to see a 1% bounce. And that's when you start with your 25% position. You go in for 25%. If it drops a little, you average down. But having money on the side is great. I have 71.4% of my money on the side. That's a lot of money for me. I like the action. I would rather, I used to go all in. That was me. So, okay, let's go on to the next stock. It's good position. Tiger, huge sell that dropped it back to 1801. What was the cause? It was people that are taking profit. Understand, Tiger was a $5 stock, then it was $9 stock, then it was 13, then 15. Now, from 15, it really took off. From 15, it went to 35. So understand, there are some bag holders. Remember my elevator speech earlier? They wrote it up, they wrote it down. So there are people that have been riding it and they're just like, I've had enough, I'm getting out. Just like eBond, right? If you look on the eBond board, there's some people that are saying, this is the best thing ever. I'm so glad I'm in here at $3.80 or $3 and whatever it is. And other people are like, yeah, I've been here from $10. This is the biggest piece of crap I've ever been in. So again, it's all about perspective. So yeah, I see the demand in Tiger. I actually looked at Tiger today and the volume in the sell-off, I mentioned this earlier on. So we had like 4 straight days selling for Tiger, or outflow was greater, but the stock's held its own. Keep in mind, it was like $16.50 when we started trading it again. So now at 1801, and there's been a pullback on like everything that's off 24% from the high or something like that. 1801 isn't bad. I'm surprised it's not higher. I actually think it probably is higher right now. So I'm going to look at Tiger real quick. Let's bring up the next question. I actually still like Tiger. So it's 1858, right now. And it's 1880 after hours. Yeah, so it doesn't take much. Anybody that's in TIGR, you could see it go from 1880 to $20 tomorrow with any type of decent day. Likewise, if it's a bad day for Tiger, you could see it go to 1750. So be cautious. All right. We spoke about people keep selling this position, taking profit. Let's just go on to the next, like skills. Okay. I mentioned skills the other day. I mentioned it yesterday. I don't know that much about it. I know Kathy Wood has a large position in it. And anytime she does, it scares me because what if she decides to sell? Now, I heard the earnings came out and it wasn't terrible, yet the stock dropped 8.73%. And this is a stock that was close to 20 the other day. So people were on the momentum ride. So yesterday, there was a lot of action pushing it up. Actually, it was even this morning, I think. There was momentum pushing it up because people think that stock should be back at $20. However, if tech continues to throw up on itself, this stock will struggle. So it falls into a tech play. Just like Plug, you might know this stock better. I think Plug's going to rebound when tech rebounds. Skills might jump back to $18, which would be a 20% gain. Now, what would I be scared of? I'd be scared of 2 more tech sell-off days. If there's 2 more tech sell-off days, then this stock could dip back under $14. And we're at $15.48, so that's a 10% move. So a 10% move to the downside versus a 20% move to the upside. Rather than trying to call the bottom, just watch. Just like my friends in New York that are talking about investing in the NASDAQ again. Instead of trying to call the bottom today or Thursday or Friday, they're telling me they're most likely going to wait till Monday or Tuesday to invest in some of these tech stocks. So let's go on to the next stock, please. EH, thank you. Yeah, so EH got crushed. They came out with earnings. Unfortunately, I added to my position right before they got crushed. I thought we'd see a rebound today. Volume was so light again. So I think EH, I'm going to look at the one-day chart. I didn't look at it today, but I'm going to assume that EH started to recover this morning before the market sell-off. Now, if that is the truth, say EH was up at any point this morning a couple percent, that's a good sign. So I actually might be buying in again. I mean, I hate to average down. It's almost like treating the system. I tell you guys to use my 25% rule, which means if you have $1,000 for a position, your first buy is $250, your second buy is $250. So I have 8 positions. I have 4 positions in EH, but if I average down, I'll have 8. So it's kind of cheating. You guys don't necessarily have money on the side. I do have money on the side, so I could actually buy 8 more. I might buy 16 more positions. I mean, again, each one's 100 shares, so it's $2,200. It'd be about like $36,000 if I buy 16 more positions. But then my average would be, and this is what I tell you guys, would be in the 2340 range. So when this pops, and let's see where it traded today, it traded over $24 today, this morning. All right, $23, $24. So if I buy 16 more positions tomorrow, which is 1,600 shares of this stock, $36,000 EH, by the end of tomorrow, my position could be positive. That is why 90% of my trades, stock trades, are profitable, because I always have money on the side. So when you go into a stock, please, if you only can afford 100 shares in your full position, then your first buy should be 25 shares. And if it dips like it did, you bought a second position of 25 shares, right? So say you're 2 positions in. For EH, I would be buying 2 positions tomorrow probably. Take your average down. Now remember, we were up 15% before this thing threw up on itself. Again, the NASDAQ threw up on itself, bad earnings. It's like a perfect storm. So again, if your company has bad earnings coming out, if Plug has bad earnings tomorrow, I mean, it'll just capitulate, and then I'll have to double, triple, quadruple down. Again, September options. So if anybody wants to play it safe, HOFV, that was like a $5 stock you guys were talking about. Hall of Fame, right? An ETF. Again, the ETF that I'm in is Dolphin, is DLPN. I got in at $9.22, $9.64. Again, I'm good with numbers, so I remember things like that. I think it's around $9.90. Maybe it went down today. I'll look at that one in a second. HOFV. And if you might say, how does he not know what his stocks are doing today? I am so freaking busy. And again, you can't micromanage your stocks. So when I tell you to zoom out, there's nothing that's going to happen today that's going to change your life. When you're like, oh man, stop calling me. Oh, I just got to put in this trade. If you get the trade in, if you don't get the trade in, guess what? It's not going to change your life. So if you're getting upset at someone, say your wife's calling, your husband's calling, your kids are bothering you, you're trying to make a trade, you're on the phone at work, whatever it is, relax. Don't get upset at your boss. Don't be like, yo, I can't even talk to you now, Joe. I'm doing something. It's costing me money. There should never be a time in your life where you're so worried about something where it's costing you money and you're so angry at somebody else for that. All right? Take your time. There always will be another entry point. If the stock spikes, another rule, don't chase it. Wait for it to come back down. It always does. If your stock spikes and you miss the selling point, unless it's an anomaly, it's probably going to go down and come back up. Just plan ahead. Have your exit. If you saw when it spiked and it was worth X number of dollars, wait for it to come. Plan ahead. So when it does it again, you're good. Okay, Hall of Fame. So again, I think this is an ETF play. It moved after hours, which I don't necessarily care for. After hours and pre-market move consists of less than 1% of the market's activity, and especially volume that is so light. So we got 3 million. Okay, so this stock traded 3 million shares today. The average trading volume for this stock is 24 million. It traded 1/8. That's ridiculously low. So you understand what I'm saying. So I don't know what's traded the past couple of days. Let me just go to the 1 month chart here. Okay. So yeah, it looks decent. It looks like it bottomed. I mean, I'm kind of surprised that I'm saying that. It looks like it's bottomed, but it looks similar to my stock, that Dolphin stock. It looks similar to TCAC. It looks similar to the other NFT plays, meaning there is demand. So there only has to be volume. So again, I mentioned this about Dolphin and TCAC. And TCAC lost 9% today. So if you're looking for an entry point, that's one of the leaders, TKAT. I'm not involved. But any stock that I like that goes down 10% on no volume, understand There's no volume here. So you went down 17 cents today, almost 5%. There's no volume. In fact, if I look at the one-day chart, I bet HOFV was up at some point during today. Let me just look at the one-day chart. And day range, 357 to 384. So that would be 19 cents. Yeah, so at some point it was up 2 cents today. The chart doesn't look great for the end of today. The 5-day. Again, I happen to like NFT plays. So yeah, I would think your risk is limited. Let me just see what the downside is. The downside would be about $3.20. So you've got about 15% to the downside and about 30% to the upside. So I like HOFV. I'm now adding it to my watch list. Again, whenever I talk to you guys about a stock or a position, anything that I give out, I always factor in. I don't just shout stocks or options to you guys. It's always risk versus reward. I always look at, if I'm wrong and there's a downside, how far down can the stock go? How far down can the option go? If I'm right about it and it goes up, how high can it go? What would my percent gain be? So a lot of my options trades, when I tell you I'm looking to make 100%, on the downside of those option trades, I guarantee I'm not looking to lose 100%. On the downside, I average down at 40%. I buy another contract or two or multiples of that. And when I get a bounce, I sell a little. Yeah, my downside might be 15, 20, 40% tops. My upside on some trades is 100%, 140, 200%. So it's all about risk versus reward. All right, BTU, and you're saying something about uranium. So let's see that one. So Hall of Fame, I would own, and it's actually on my watch list. So we've added 2 stocks to my watch list. If you missed earlier on today, somebody asked me about SI. SI, silver mine, silver gate. It actually, the chart looked off the hook. It looked like it could pop from 102 all the way up to $140, which is a heck of a return. I might actually try some longer term call options if I don't pick up some shares. All right, BTU, let's look it up. Sorry for the delay. Peabody Energy. Okay, so I'm assuming this is probably a green energy play. This one looks fantastic as well. I'm not really sure why. Okay, volume's been off the charts on this one. Wow. Okay, you guys found a winner. Here you go. BTU. I don't even know what it is. Energy. Peabody Energy. The chart, if you look at BTU, okay, it's a New York Stock Exchange. So it's not a NASDAQ stock, okay? It's an energy stock on the New York Stock Exchange, which tells me it's not a green energy play. It's probably a real energy play. The same way I mentioned oil stocks are doing very well, I'm assuming Peabody is some type of real energy, all right? So let me tell you what I see. I see ever since April 10th, this stock has been going up. So you were at $3.40, $3.50. Now we're at $4.70. So it's about 30% higher. With that said, it's been exploding since it dipped down at 360. So yeah, it's been exploding for like 4 out of 5 days. I like it. So let me see what it could actually run to. It could actually move north of 5. Yeah, I mean, you know what? I'm going to take it off my watch list. Sorry for getting so excited. Why am I taking it off my watch list? Because it's approaching its peak. It has 3 peaks that I've seen over the past year, and it's approaching the high point. So even if it goes higher, I don't want to chance it. No, it might go higher. Uranium, best performing industry. Sure, yeah, metals, uranium, things like that. Mining companies are doing fantastic. So without doing my own due diligence, I wouldn't tell you guys to buy it. The chart, the demand looks off the chart. You know, it's crazy. It looks beautiful. However, me not knowing the stock and it looking like it's at one of its peaks would make me scary to jump in. So I would not be, if I were in it since like $1 or $2 ago, I'd be holding because it looks like it can go higher. Sorry, these lights in here are crazy. Let's go on to the next stock, and then we're going to TYME. Again, beat up with no volume. So psychology of trading. Who's going to be buying TYME unless there's news or a catalyst or earnings or something that's going to make the stock go up? Without that, that's not going to happen. With the markets getting beat up, there are other stocks like that. I had mentioned Trevina in last year, which is 2020. It went from $1.53 to $3.21. I think it's like $1.70 or $1.80 now. Now they have this great drug that's going to cure the opioid addictions, and they started selling it. But then they said their news were going to come and say, anyway, all of these type of stocks are getting beat up. I would stay away. I'd be very cautious. Let's go to one more. Froggy, what's up, dude? Institutions hold their buys for 60 days to avoid applicability. I don't know that for a fact. Capital gains tax have changed so many times since I was on Wall Street. And again, I wasn't told to worry about any of that. I was told to make money. And I'm assuming that traders are told the same thing. Dude, make money. You don't want to go back and say, like my department, we had one department one year. My boss was a total a-hole. We lost $8 million in the quarter. We used to order in lunch. We took car services. I went to the gym every day. This is what goes on at Wall Street, just so you know. So my division lost $8 million. Needless to say, they sold that division to Greenwich Capital or another, it was crazy. Okay, let's go on to the next question, please. Why do you think large institutions haven't purchased PaySafe as of yet? Well, I wish you gave me a symbol. So PaySafe, I'm sure I'm going to find it right here. PaySafe Limited. Why haven't they purchased? I don't know. Chart doesn't look good. The volume was light today. Sorry, let's just go here. That's a one-year chart. One-year chart doesn't look good. The 3-month chart looks terrible. It's slanted down. All right, I'm not dabbing. That's not me dabbing right now. Let's look at the 1-month chart. 1-month chart looks terrible. It doesn't look like it peaks. And actually, if I were going to sell a company, I'd be selling this company all the way down for another, it's not terrible, for another 30 cents, another 2%. Let's just see if it could drop further. Yeah, it looks like it could probably drop even further. There was some support about a week ago, and then the markets turned ugly. So again, you're looking for the rebound. If there is a rebound, if there is a bottom for tech, and for these, I'm assuming PaySafe is probably some type of a payment portal, somewhat similar to Square, to PayPal, to Pay24. There are so many out there, but the chart looks terrible. I'm not going to lie. It doesn't mean it can't spike off some news. A lot of these fintech companies, and I'm assuming it's fintech, I don't want to jump. But again, volume, 1/3, market cap, 2.4. So for it to jump, let me just see. It has got negative earnings, so it has no PE, and it has no forward PE. So that's why institutions aren't jumping in. If you give me a company and you're telling me it doesn't have earnings, what is my incentive to buy in? Well, I mean, if they're solving cancer, if they're coming up with the next clean energy, then I get it, okay? But unless you have proof, then it's all talk. It's like, yeah, we're going to do this. We're going to discover. There are so many companies, and especially the ones that go IPO. You know why they go IPO? Because their burn rate is ridiculous. They're burning like $3 million a month, $10 million a month. These biotech companies, they need money for research, for trials. Then they need money for patents, for other things. It's crazy. So you guys asked me like bingo. Somebody asked me about bingo. It's the same thing. I would stay away from these biotech companies. Yes, they can take off if they cover, if they discover the right cure. Other than that, it's like throwing darts at a wall. One of them is going to be like, great, you're going to hit the bullseye. The other ones, you're going to miss. And if you like being upset, that's what you do. All right, CMMB. I haven't spoken about. Okay, therapeutics. Okay, so we're another therapeutic company. It spiked all the way to $126 in February, and now is at $23. So what do you think? 126 in February, which is what, 3 months ago, and now it's $26. So it's 1/6. Let's say it's 1/5. So if you lost 80%, right? 80%. Let's see what it's lost in a month. So in a month, it's lost 18%. Volume is so low, 165,000. So I understand why you like this company. You like this company because you think it's going to pop. The shares outstanding are 10 million. The average volume is 300,000. So what happens? It needs to be talked about on Reddit, or somebody needs to manipulate the stock. So if you're looking at this stock, you're looking for it to be manipulated, and you're looking for it to be on the right side of that. Meaning you get in, and just somebody who's like, hey, I'm going to buy 10,000 shares. I'm going to buy 10,000 shares. I'm going to buy, and then all of a sudden the stock's moving, and people are jumping on, and the stock's like $40 or $50. It can happen. That's a gamble. It's complete roulette. There's no rationale behind it. So I'd be selling that one. What time we got? 9:34. Let's go for 2 more stocks here. And GMBL, online gaming. So online gaming, like online sports gambling, because I know I like sports gambling. See, the thing about online sports gambling is they have these fantasy leagues like DraftKings and FanDuel and what have you. And they're all fixed. They let people buy 150 entries. They use an algorithm. They use a computer program. They get the guys that are the best combinations. So if you ever play FanDuel or DraftKings, right, you're going to lose. And you're not going to lose because you're an idiot or you're bad at fantasy sports. All right? You're going to lose because some dude, and there are hundreds of them out, are buying 100 entries or 20 entries, whatever the max is, and they have every single combination. So even if you get the 3 best players and you're like, my guys are exploding, they not only have your same 3 best players, but they have the 3 next best players. So online gaming has to be very specific. Esports, it seems kind of sketchy because if you're really in online gaming, you're not going to call yourself esports. Maybe this is esports like gaming, like, not gambling. Maybe it's gaming. You put gambling. I think it might be a gaming company. And if it is gaming, yeah, gaming's big. So if it's gaming, good. If it's gambling, I wouldn't call myself esports. It probably would be. It seems a little fishy. So I'm looking at the 3-month. It looks like it spiked all the way to $18 or $19. And ever since that, it's dropped back. So I'm going to have to look at the 1 month. The 1 month, it looks like there's a little demand. There was selling and the stock was going up. So when there's selling and the stock is going up, there must have been news around the 25th of April. If the stock is going up off news and people are selling into it, meaning the outflow is greater. So they're selling and people are buying. So it's going up, but the outflow, people are more interested in selling than they are buying. I like to see it when the stock goes up because it's green, because there's more inflow than outflow. When there's outflow, and I saw the outflow with XL. XL released some news. And again, we're going back a couple of weeks, maybe 3 weeks, 4 weeks, something like that. The stock spiked like 70 cents and people were selling. So it looked red, even though the stock went up. So I was like, what? It doesn't make sense. So I did more research. So yeah, the stock could be okay. Let me look at the 5-day. What do we got? It doesn't really show anything. The good thing is, for this stock, GMBL, if it were going to go down, guess what would have happened the last 4 days? It probably would have went south of $10. So I'm actually going to add it to my watch list because I know gaming's pretty big. Oh, so it went up 60 cents today, went up 5% today. Volume was 1 million, which is half, which is pretty good. The high of this stock was 24 and change. So obviously people bid this up. They thought it had substantial earnings, maybe. I guess it has a substantial platform. I'm going to add it to my watch list. I'm going to research it tomorrow. Let's go on to another stock, please. Apps, big growth stock that killed earnings but beat up NASDAQ. Okay, yeah, that's great rationale. So, Ethan, I don't know what the chart's going to look like. I'm assuming it's going to look beat up since the NASDAQ's beat up. But when you have a rationale like that, if they killed earnings, if they have growth, meaning their customers are growing and their customer usage is growing, then that's great. Okay, real quick example. Fastly, right? Fastly got beat up today. It went under $60. Then what happened? They probably reported after hours, and the stock went down to, I think, $48, if I saw it right. I'm going to check that real quick after I give this one. But basically, Fastly's everybody's favorite. They did TikTok. They used to be a client of mine. When I did some type of promotions for them, Fastly was a customer of mine. You know what they did? They told me, bye-bye, we don't need you anymore. We're using this PR firm. We're using this and that. We're too big now. And I said, you're too big. You guys have outgrown your boot. And that was when Fastly was $125. Now they're $46. Okay. So let me look at this stock real quick. APPS. NASDAQ's been beat up for 8 straight days. The stock showed rebound potential, but 4 straight days now it's been going down. So yes, when the NASDAQ, I'm adding it to my watch list. When the NASDAQ turns around, there are going to be certain stocks that I want to play. There are going to be certain stocks that suck still. Just when the NASDAQ turns around, you're like, why isn't my stock turning around? It doesn't mean every single stock is going to change. You have to be extremely picky. So when this gentleman mentions they had earnings, they killed it. The stock was as high as $88. So it's down 17% in the last month. It's down 8% in the last 5 days. It looked to rebound on May 4th into May 5th. And then what happened? It sold off. And then it sold off a little at the end of the day. So yeah, it looked like it was a good stock to rebound. I'm actually going to look at this one tomorrow. I mentioned when I see the bottom in the NASDAQ, there are going to be certain stocks that I'm looking at. Well, congratulations, Ethan. Thank you for helping me because APPS is now on my list. All right, love. Let's see what you got for me today. You've got DB. Is that like Deutsche Bank? Okay, so Deutsche Bank, obviously not the best of the banks. It looks like it was been beaten up a little, and it's showing slight recovery. I'm just looking at the 3-month. So it hasn't moved like the other banks. Is that what you're telling me? Probably. Yeah, I mean, other banks have definitely moved more. It took some major action. Yeah, so Deutsche Bank actually looks good. Why? There's been heavy volume considering what it usually sees, and that's 5 out of the last 6 days have been heavier than the past 34 days. Now, that's either a positive or a negative. In this case, 4 out of the past 6 days were buying days. So Deutsche Bank is probably trading with the Dow. So as the Dow goes higher, as banking stocks go higher, Deutsche Bank is now on my list. And I thank you, love, because I'm adding it. It looks wonderful. So where could Deutsche Bank go? I don't know, because it looks like it's making highs. Let's see where it was a year ago. No, it keeps going higher. So it would have to – it has a nice chart, but it actually looked like it just spiked. So actually, I'm assuming Deutsche Bank is probably going to pull back, which is telling me that some other banking stocks might pull back as well. If you're in any banking stocks and you're making profit, let's look at another one. I don't want to steer you guys wrong. I'm going to look at Goldman real quick. Goldman Sachs. What? Why is a news story coming up? All right, let's do this. GS, right? Goldman Sachs. There it is. All right. Yeah. So banking stocks have been spiking like crazy. Goldman was what? Oh, that's the wrong chart. Let me see. Yeah, Goldman was 329. Now it's up 10%. So I guess all banking stocks have probably jumped 10% in the last few days. And if not, it looks a little frothy to me. I would not be purchasing banking stocks right now. Now, I think they said that banking stocks move with the 10-year note. In fact, you probably want to Google something like that, like how do banking stocks react to the 10-year note, and then just do your research. If they react in a good correlation with the 10-year note, and you know the 10-year note, you've been told inflation is going up to 2% at some point during the year, and bank stocks react positively to that, then yes, banking stocks are still good. So banking, oil, all right, you want some safer plays. Somebody mentioned ETF. I don't have an ETF play for you, but I would be looking at oil stocks, Exxon, Chevron, banking stocks. I like best in class, so I like JP Morgan. I like Goldman Sachs. If you want to look at a smaller play, we just looked at DB, Deutsche Bank, right? So yeah, I worked for Deutsche Bank, one of my banks back in the late 90s. I worked for NatWest. I worked for JP Morgan, Salomon Brothers, Smith Barney at the time. I worked for D.E. Shaw. I worked for a lot of these institutions. Again, I mentioned this once before. My headhunter used to call me up and say, hey, Matt, someone's giving you more money. Why don't you go work for them? And then I did. And then I went for Greenwich Capital. And then I worked for another company. And I was doing all sorts of things. It was always related to numbers, always related to money and finance. It was never on the trading desk, but it was being in a supportive role or almost an advisory role with some of these people, because I would review their trades and I would tell, this trade makes sense. Yes, this trade makes sense. And then I would look at someone and be like, how do you let this person on the trading desk? This is so ridiculous. This dude is trying to lose the company $3 million on this trade. Do you not see this interest rate swap? We're going to lose $3 million most likely tomorrow if this goes through. And they're like, oh my God, Greg must have put this in wrong. Like everybody took the blame and pushed it to someone else. That's what happens on Wall Street. They push the blame. Everybody's looking to make money. All these companies, these banks, these institutions, they're all looking to make money. Where are they trying to make it from? From you. They're stealing it from the retail investor. They're stealing it from the uneducated trader. They're stealing it from people that are apes and that buy the ask and that have FOMO and follow the stock and hear a news story and things like that. Don't let them steal money from you. I'm trying to teach you how to trade. Some of you are very good at it. Some of you are quick learners. Some of you are doing great. So then you use the alerts, and you use the alerts to your advantage, or you use my market predictions. When I tell you the market's doing this or that or going up later today, or that, you know how to trade it and be profitable for yourself. So I'm not telling you how to trade. I'm not trying to tell you exactly what to do. So please, thank you. It's quitting time. Pay this forward. Share this video. I'm not tweeting it tonight, but please, somebody tweet this video. Somebody tweet the stream. Ask to share it. I do everything organically, so we're just trying to pay it forward. My platform, $3.49. If you watch this whole video, that means you want to learn. Please subscribe and pass it along. Thank you so much. Love you all. Appreciate it. See you tomorrow.